Powell, though, hinting rates may be coming down soon. Let's bring Doug Flynn in on all of this from Flynn Zito. And that's the message, right? That this September rate cut that you've been looking forward to is what we might end up getting.
Yeah, the market has now, you don't see this often, but 100% probability that they're going to get a rate cut in September. So that's why you see the market move today. Both the stock markets were up and the bond market prices were up, meaning yields went down. So a lot of green on Wall Street today because we moved one step closer to the actual inevitability of them cutting rates. So whether it is September indeed or slightly thereafter, it's much closer than it was before he started speaking today, for sure.
I think one of the things just kind of normal people who invest their own money for retirement or whatever the case may be have been looking at is when this would happen and how do they adjust their allocations, right? You know, how much they have in stocks, how much they have in bonds. I mean, they've actually been getting paid something the last few years. You know, you can get 5% pretty easy, right? And pretty much keep it in a cash equivalent. So now maybe that is not as easy. You want to get back in the stock market. I mean, what's the dynamic in the market like the rest of the year, do you think?
I mean, well, the crazy part is you also have the election year this year.
Yep.
So when you look at that, you know, actually during July to November in election years, volatility in the market historically increases by 25% over the normal average year. So you can expect a little bit of volatility. Right now, that volatility has been up, but it can go the other way. And so the thing you have to think about is, while obviously down the road, 3 and 5 and 10 years, you want to be in the stock market, in the next year or two, if rates are coming down, there is a lot of opportunity in the bond market. So if you are risk averse and you know that your savings accounts and your money market rates and your CD rates are going to be going down with interest rates lowering, that's the opportunity on the bond side. So you can get some better returns than money markets and savings over the next year without all the risk of the stock market. But long term, they're looking pretty good there based on where things are right now in the overall market.
Interesting. Before we get the closing bell today, I want to talk about big tech a little bit. We could put up the earnings list here from some companies people definitely know. There's Amazon. That's one to watch. Today we have Meta. Today's the 31st. Of course, the company behind Facebook. There's Meta's stock price. Amazon and Apple are also reporting there's Apple's stock price. What's the state of big tech right now? You talk about volatility. You talk about where the stock market is. What about big tech?
Yeah, you know, if you look at the top 10 companies in the market, which really get all of the news, and most of those are the big tech companies, though the valuations of those companies are about twice the valuation of the other 490 stocks in the S&P 500.
Right.
So you are overpaying for that growth, and they've delivered a lot of that on the back of AI. But looking forward, you know, some of that might get muted. What we're seeing is actually the opportunities spread out now a little bit more to those other companies, the other 490, and even some mid-size and some smaller companies, as well as international. So it's not that tech isn't going to do well. It's just when you have this crazy run, you have to think, is my next dollar best placed in something that I already have a bunch of money in, or should I spread it around a little bit? There's probably other opportunities at better pricing in those other areas.
So you wouldn't chase, we showed them as the Magnificent Seven up there a minute ago, you wouldn't chase Meta, you wouldn't even NVIDIA, obviously the big one, Tesla's been up and down, you wouldn't chase the growth there?
I always look for the opportunities to buy it when it comes off a bit. I would not chase at the highs. If you want to place money in the markets at the highs, look for the things that haven't run up quite as much, and look for those opportunities when they do come off to pick up some of those high flyers. Not to say you shouldn't have it, but most people already have way too much of it as it is. And diversifying, we've heard a million times, but that's actually not a bad thing. And there's going to be more opportunity for that as the market spreads out. And as things go from here, I think that's how it's going to go.
Well, sometimes we hear things a million times because they're true. That's what they used to say, you know, about cliches. It's a cliche because it's true, and that's why the people make it into a cliche. Thank you, Doug. Good advice as always. We appreciate it.